Canada has one of the most robust, thriving cannabis markets in the world. Or so you might think. After the federal legalization of adult use cannabis on October 17, 2018, excitement around the emerging recreational cannabis market swept across the country, with large, publicly traded companies building greenhouses left, right, and center, increasing production capacity, and investors going all in. Business was about to boom. 4 years later, things didn't necessarily pan out the way some people expected. Those large publicly traded companies are now closing down those same facilities, laying off hundreds of employees, and reporting millions of dollars in losses every single quarter. However, there are some outliers. These outliers are mostly private cannabis companies and have managed to see some success in Canada and take significant market share away from the large licensed producers. They are predominantly smaller craft growers, highly focused on producing quality products that appeal to cannabis consumers that truly care about the products and just want great cannabis. In a 2021 earnings call by Tilray, top boss Irwin Simon infamously referred to these craft growers as ankle biters, a term that has now become a rallying cry for the small growers that continue to steal market share from the big players. But the unfortunate reality is that even these smaller craft producers are struggling. Why? 2 words: excise tax. Excise tax has seemingly become the major issue in Canadian cannabis industry, with a sharp increase in cannabis businesses and organizations warning of the disastrous impact excise tax has had, particularly on small to mid-sized producers. Here's George Smitherman, President and CEO of the Cannabis Council of Canada, on the Cannabis Wiki podcast, speaking out on the issue.
Well, I'm hearing over and over again, sadly, from companies that are very, very uncertain about their future, that sustainability amongst the billions of dollars of investment that have occurred is a very, very serious threat. And that's why we've brought so much attention to the extent to which government excise taxes, fees, and distribution markups are crowding out the legal players, are crowding out the growers, and in some cases probably also crowding out the retailers.
Now, taxes aren't fun to talk about, so I'll try my best to make this as simple as possible. In Canada, excise taxes are paid by the producers, the companies growing and packaging cannabis products before it's sent off to the various provincial wholesalers. All provinces and territories, with the exception of Manitoba, have entered into a revenue sharing agreement with the federal government, whereby 75% of cannabis excise revenue is distributed to the provinces and the remaining 25% is kept by the federal government. The combined cannabis duties impose a minimum rate of $1 a gram or 10% of the producer's selling price for dried cannabis, whichever is higher. This is known as an ad valorem, which means there's 2 options, and the government, or the Canadian Revenue Agency, to be more specific, takes a larger amount of the 2. The inherent problem here is that cannabis is never sold for over $10 a gram, and the wholesale price of cannabis continues to drop due to extreme price compression in the market. Despite reports of an undersupply of cannabis at the start of legalization, there is now a huge oversupply of cannabis, with analysts reporting tens of thousands of kilograms sitting in storage rooms across the country. A recent report by MJ Biz Daily stated that according to data provided by Health Canada, over 445,000 kilograms, or nearly 500 tons of unpackaged dried cannabis was destroyed by licensed producers between 2018 and 2020. With the wholesale price of cannabis sitting at much less than $10 per gram, the excise tax is taking a much larger chunk of producers' profits than perhaps originally intended. According to a report released by Ernst & Young in June 2022, looking at sales data of recreational cannabis in Ontario, Canada's largest provincial market, government taxes and provincial markups can sometimes represent more than 45% of the price of a basket of legal cannabis products. Excise tax is crippling the growth of the cannabis industry. The thing to remember is that the larger producers don't really care. Large producers are substantially subsidized by their shareholders. They can simply wait for their competitors to effectively go out of business and into receivership or declare bankruptcy. This means smaller craft producers are particularly at risk, and industry experts are warning that this excise tax regime could lead to the industry becoming an oligopoly, with a smaller number of large producers controlling the market. It's become clear that changes are required in order to achieve the objectives of the Cannabis Act and build a vibrant and sustainable legal cannabis industry in Canada. Now that you have a better understanding of the excise tax regime in Canada and why it's an important issue, let's look at some of the possible solutions. First and foremost, the $1 a gram minimum does not make sense in a price-compressed market where the average wholesale price of cannabis is $5 a gram or less. This needs to change, but will not be easy, requiring coordination between the federal and provincial governments, Health Canada, CRA, Finance Ministry, and provincial wholesalers like the Ontario Cannabis Store. Some industry experts argue that calls for change on excise tax tend to focus a bit too much on the federal government and fails to recognize the real issue, which is the harmonized sales tax, or HST, and the wholesale markup by provincial distributors, which has the biggest impact on producers' margins. Therefore, it is argued that advocates for excise tax reform should instead concentrate on making changes at the provincial level, where historically, it tends to be easier to effect change. Regardless of where efforts should be focused, the primary solution outlined in the Stand for Craft report, a comprehensive document developed by Tantalus Labs, outlining the key issues surrounding excise tax, calls for a gradual and floating excise duty, a model that has proven effective in the alcohol industry where taxation is based on either monthly sales or aggregated volume of production. Here is Dan Sutton, founder and CEO of Tantalus Labs, explaining this approach in more detail on the state of craft.
It's a complementary solution. First and foremost, the $1 per gram minimum does not make sense in a price-compressed market where prices on average are $5 or less per gram. So we got to look at that. We got to change that. I know it's not simple. This is really scary because 75 cents on the dollar of every dollar in excise tax goes to the provinces. We do need some coordination between provinces advocating for tariff reform as well as Health Canada, Finance Ministry, and CRA all advocating for excise reform. So aside from that, change to just a floating percentage. That's the way to do it. It's going to result in some cheaper ounces. It doesn't really matter that much. And it allows us all to get the fundamentals into shape. There's no other pieces that I think we've got an amazing model in craft beer. This is provincially regulated generally. I think there are some federal implications, but if you brew below a certain amount of beer, 15,000 hectoliters, you get taxed at a certain level. If you brew more than that amount of beer, you get taxed at a higher level, which you can afford to pay because you have economies of scale that otherwise make your margins better on higher volume products.
Considering the groundswell of support we've seen across the industry towards reforming the excise tax regime for cannabis, how likely are we to see any significant changes? The Canadian government did announce in 2022 the formation of a cannabis strategy table as part of its latest budget, and industry stakeholders expressed hope for fresh approaches to the myriad of issues facing the cannabis industry, given its orientation towards fostering economic growth. Here's George Smitherman again speaking on the roundtable announcement.
We saw the commitment that they made to creating an industry strategy table at ISED, at the industry department. This is noteworthy because we haven't had anybody in the government that's been willing to put their arms around us and say, why don't we see what we can do to grow this thing? Right. Or what have you. It's mostly been, we don't want you to do too well. Don't be getting any new customers.
Here's my thumb, stay under it.
And here's a new regulation for you to live with. So it's refreshing and hopeful in that sense.
Despite this optimism, other industry stakeholders are not quite as hopeful. Chief Executive Officer of BC-based producer Pure Sun Farms, Mandesh Dosanjh, is quoted saying, "I'm a realist. I've never seen a government agency suddenly reduce their incoming revenue streams." Instead, he suggests simplifying the supply chain and administrative costs, pointing to the different rates of excise tax per province and suggesting a national excise stamp is implemented. Beena Goldenberg, Chief Executive Officer of cannabis producer Organigram, also does not expect any major changes. Instead, she has urged the government to reduce the financial burden on cannabis companies gradually, with one potential solution being to strike down the 2.3% regulatory fee that Health Canada applies to cannabis revenue. With a mandated review of the Cannabis Act scheduled to take place this year, and a groundswell of support from the industry asking for changes to the excise tax regime, we will need to wait and see if anything actually happens as the industry waits with bated breath. Thank you for tuning into this episode of Behind the Smoke. Look out for more videos dropping soon and subscribe down below.